Thank you very much for joining me. This is the morning market review. It's Thursday, it's the 2nd of March, 2023. My name is Joshua Shaw, I'm a senior market specialist at FXCM, and my email address rshaw@fxcm.com. I'm just going to go ahead and bring up the high risk investment warning. I'm going to keep this on screen for a few moments. Can I just double check that you guys can hear me, see the screen, and see me? Okay, excellent. All right, and what I'd like to do is just bring up the market commentaries disclaimer. I'll keep this on screen for a few moments as well. And what we'll do is, I want to just take a look at some data that came out yesterday, and then we're going to look at the day trading layout and try and marry the data that came out yesterday with the day trading layout to see if there's some sort of opportunity for us to take advantage of that. And here is our references, MarketScope 2 and tradingview.com. And the data that I want to effectively show you is the United States ISM manufacturing prices. So yesterday we saw the ISM manufacturing data come out. This is a component of that. We're going to get the services data later in the week. I think the services comes out on Friday, but this is actually quite a serious, in my view, a serious change to what's happened on the price front of the goods part of the market. Remember, the goods part of the market's been behaving. So you can see that the prices had dropped below 50. They dropped below 50 coming into 2023. They looked very much under control. In fact, in the interview that Fed Chair Powell had with David Rubenstein, he commented that the goods prices was under control, but they wanted to see services ex housing come under control. Well, this kind of rocks the ship, rocks the boat, I beg your pardon. And you can see it's jumped back above 50. The prices in the manufacturing sector seems to be increasing, and this is based on a survey. It's a survey that goes out to the managers, and the managers are asked, are you experiencing higher, lower, or no change in prices? Are they experiencing a high change in prices? And the market didn't like that. Okay, if you take a look at the real rate, so it came out over here. So the real rate jumps up. Real rate jumps up, moves in this northeasterly direction, and then you take a look at the dollar. The dollar jumps up and moves in that northeasterly direction as well. So, in fact, the market is repricing because it's worried what the Fed's going to make of this fact that now there's another front that they have to worry about in terms of the battle against inflation. Whilst it looked like the good side of the market was fairly under control, it's the services side which was a concern. And if we take a look at the ISM services side, so let's just bring up services. So it would come under non-manufacturing. And we take a look at the non-manufacturing prices here. The non-manufacturing prices are coming down, but this is a diffusion index. It's still above 50 in a fairly serious way. So you can see that the services prices are still increasing. Okay, they're increasing perhaps at a declining rate, but where the battle was perhaps seen to have been won or have been made some real inroads was on the manufacturing side. Yesterday's data now questions that to a massive degree, and that's very worrying. Okay, is this the first webinar of the week? Yes, Anna, this is the first webinar of the week. So the idea here is services has got a lot to do, but now all of a sudden, okay, now all of a sudden it looks as if manufacturing is not the not as benign, shall we say, as it was just 24 hours ago. This jump up here is quite rough, to say the least. And then again, let's just be very clear in that now the interest rates are starting to move up. They're starting to get pulled up because of that, and that's important because we're not going to do the mathematics today. But the time value of money, well, one of the variables in the time value of money is yield and the rate of the required rate of return. But if the required rate of return is moving up, that's going to put pressure on present values of the risk market, and that's exactly what seems to be happening. So if we bring up our day trading layout, and the first, is anybody that's not familiar with the day trading layout, just let me know, because you need to email me so I can send you to the playlist where we've done, we did this quite extensively. Okay, so what we have here is the fast stochastic. What we're looking at with regards to the fast stochastic is the direction of the fast stochastic. We're trying to get the sentiment, trying to understand which way is the market biased towards. Well, we're looking at the DAX. It looks as if the DAX is biased towards the downside. Well, that's not surprising given the fact that inflation is still very much seemingly out of control. And if inflation is seemingly out of control, well, that's going to push the required rate of return up. If it pushes the required rate of return up, present values are going to come down. Damir, you're going to have to send me an email. Okay, I can't work off the questions here, so I'll give you my email address, and then I'll reply to it when you send me the email. Send it through to. Okay, so anybody that needs a link, you just send me an email there. It's much easier for me to work through the emails, and I'm very happy then to send the playlist to you. Let's go through to the hourly chart here, and you can see the hourly chart here is in zone 3. Okay, so we're in zone 3. That's the weak area, and that's between the lower blue and the lower red. What about the stochastic? Well, the stochastic, again, this is a fast stochastic, is below 50. So let's just make sure we understand what we're trying to do is we're trying to sync the hourly with the daily. The daily is giving us a filter. That filter is to the downside. Okay, so we're getting that filter to the downside. The hourly is saying, well, yes, we are weak. We're in zone 3, and the hourly momentum is below 50. Okay. And now we can go down to the 500 chart and see if there is any sort of opportunity here. And incidentally, you can see that it's dropped below 50. It's dropped below 50. What am I talking about? I beg your pardon. It's dropped below 30 over here. Okay, it's dropped below 30. And what we can do is we. This is a demo account, but incidentally, what we want to do is I would look to take advantage of the drop below 30, because that's indicative of a strong momentum to the downside. And as long as it stays below 30, one would expect that there would be pressure to the downside. Now, if it bounces and comes back above 30, well, that's the end of that would be the end of the trade. You'd have to close it off because there's no momentum that you can work with. So the stochastic here is really all about using the momentum to work with you. So you can see that the DAX is looking quite weak as we start the day. Let's just take a look at the euro as well. So euro has been very strong, just on the back of the news of the progress between the Northern Ireland, Europe, and the UK. Sort of the dealings coming out of that. But let's just take a look and see what's happening with the euro. And we want to do a top-down analysis. We want to start off. Okay, we want to start off with the daily chart. The daily chart's pointing down. Okay, so the daily sentiment's down according to the fast stochastic. Because we're on the daily chart, we're just looking at the direction of the fast stochastic. The 50 here doesn't really come into play. The 50 does come into play on the hourly. And you can see that it is under 50. So we're in the bearish side of 50. And you can see that we are in the bearish zone. So we're between the lower blue and the lower red. And that is syncing the hourly chart with the daily chart. Now, let's just take a look at the 5-minute chart here and see what's happening. So you can see that we've lost the momentum here. Okay, we've lost the momentum here, but effectively what we can try and do is we can try and catch it on a pullback. So you can see that the pullback here is, we use this, the RSI. The RSI is used slightly differently to the way that we use, not slightly differently, very differently to the way that we use the momentum. The momentum is perhaps easier to understand. If it drops below the 30 level and holds, then we get the momentum into the downside. What we're looking to do here with the RSI is get some sort of pullback. So we've got a 1, 2, okay, 2, 3, okay, and now that we've pulled back into the 70 region, we can start looking for reference candles. Okay, we can start looking to see if we can get into the downside. And what we can do is we would just continue to drag these up until we get the opportunity to move in. So let's just reiterate what we've spoken about. We've spoken about the ISM manufacturing prices, which really showed a surprise upwards tick. That's, to me, dangerous, because it means that the war on inflation, so to speak, has now just intensified, because what looked like to be a front that was under control has just flared up. So that's now put pressure on yields. Yields are moving to the upside. Well, if yields are moving to the upside, then the present value of risk assets such as the DAX are under pressure. We've also seen, by the way, I'm not sure I emphasize this, we've seen that the US dollar is following the yields up. That makes sense, because as soon as there's any sign of an increase in risk, well, the dollar is a safe haven. It automatically is going to draw capital into the safe haven. Well, if the dollar is getting capital drawn towards it, well, then it makes sense that the euro potentially comes under pressure. So we can see that there does seem to be a case for a weaker risk market, stronger dollar, weaker majors. And if that's the case, we want to just see if we can line up the daily chart. We want to see if we can line up the day trading layout with the underlying fundamentals and see if we can marry the fundamentals and the technicals together. All right. This could be slightly sort of complex if anybody hasn't been exposed to the day trading template, but you can just send the email to me, okay? You can just send an email to me. All right. All right, I think that's where we will, as far as we'll go this morning. If there's any questions or comments, please go ahead and post those in now. I'll see if there's any questions or comments. I'll see if I can answer those. Non-farm payroll is going to be on the 10th. Okay, it's not this week, it's on the 10th. It's going to be not this Friday, it's going to be the following Friday. And the obvious question is, why is it not on the first Friday of the month? So I looked into that, and the actual way that it works, the calendar works as follows. It's the third Friday from the week including the 12th of the month. So you've got to count 3 Fridays from the week that includes the 12th, and that's when non-farm payroll is going to be. And it just so happens, Anna, that that Friday coincides with the 10th of March and not this Friday, which is, of course, the 3rd. So it's not tomorrow, it's a week from tomorrow. And of course, we will be having a live trade then. So be very clear, it's not tomorrow, but it's a week from tomorrow. All right. Any other questions? That was a good question. I forgot to mention it. Live trade using day trading. Like today, it's a bit difficult. By the way, you can see that the pullback method here is about to give us a signal. It's a bit difficult at the moment, just because of the timing. We're only getting the DAX to open now, so it's very difficult to trade on the open because it's the algos. The algos really kind of dominate, and so maybe what I'm thinking is maybe we can organize one a little bit later in the day. The webinars may be sort of shaken up a little, so we'll just see what happens along that line. All right. Okay, so now what you would do is you'd put in an entry here. So what we'll do is we'll put in a sell. This is a demo. I'd only put in one contract. Okay, and then we would kind of monitor to the downside. All right, let's leave it at that, guys, and then have a good day, a good evening ahead. We shall chat tomorrow morning. Thanks very much.